I think that there is tremendous freedom in structure. And there are a lot of people that buck structure. But for me, if I can find structure, I know then, okay, here, these are just the rules. And then I can go do whatever I want because I know the rules. I don't have to stress it. And so, hey, 660 is the number, and oh man, I should pay attention, right? And I remember actually talking to a tax strategist when I was making like $400,000 a year and thinking I should be able to do something. Like I have a big tax bill, and them being like, come back to me later.
Like keep increasing your income.
Yeah.
You have an income problem.
Yeah. Yeah,
when
right.
you solve that, you'll then have a tax problem, and that'll be a good problem to solve at that point. Yeah,
exactly.
I mean, and there's really just like the tactical pieces is there's 4 main things to focus on. Can you take your active income and make it more passive for tax purposes? Because that's going to save you a minimum of 3.8%, but as much as 15.3% just in how you classify your income. Can you turn ordinary income into capital gains? At this time, that could cut it in half. That could change with the tax law changes. Can you find things that are tax-free that would normally be taxable, which if you have any highly appreciated assets, that's possible with charitable trusts and donor advised funds and, crazy strategies inside of like, private placement life insurance, which again, the more wealth you have, the more these become available. And then the last one's like tax arbitrage. You spend $1, you get more than $1 back, where most people are spending $1 to save 37 cents. Well, you just lost, 60 plus cents if you weren't going to buy that anyway, if it didn't make economic sense. So, so those are reclassification strategies that usually come from attorneys more so than CPAs.
Yeah. Well, that was the answer to 2 questions.
Oh, there we go.
Which is great. Which is, one is kind of what is the overarching strategy that you start with, right? Where do you start? And
my start is 3 to 4 people on your team. First, if you're a bigger business, you have to have good bookkeeping, controller, or CFO, depending on the size of business. CFO is going to do more pro formas. They're going to manage more like of the entire cash flow in a business. The controller is just going to handle payroll. But either way, if you don't have timely data, you're going to overpay tax. Most people don't have timely data. They try to make a strategy for 2021 and 2022, and now they're just back in a deferral.
Or in November or December.
Right, or which is really late because especially right now, like if we're talking, in 2021 right now, everyone's trying to move that's really wealthy their money through trusts right now to avoid the increased taxes that are coming. So attorneys are extraordinarily busy right now. And if you're not doing something, you're pretty late in the game. Mm-hmm. Now you might be able to convince someone if you have a friend or have a favor. Like I've been able to do that for clients just because of the number of referrals that I send to these people. But the attorneys still get annoyed with me. So it's important to have that. Then the second thing is having a tax strategist that you meet every quarter with and talk about how do you maximize your deductions. Now, deductions are going to be limited. Unless you're like a real estate professional, deductions, you don't want to destroy all income in the business to a point where you can't get loans and where, but they are helpful. Then the third thing is that, tax attorney or a corporate attorney that's going to help you reclassify income. And then if you own commercial property, it would be getting an engineer that can do some cost segregation, which allows you to accelerate depreciation on real estate. But it's really the 3 main people on the team and going back the last 3 years to see if you overpaid taxes. They changed rules in COVID where you could go back 5 years and see if there was ways to mix and match your operating losses. So they used to cap operating losses at 80% for taxes, but they said, okay, we'll make it 100%. And you could take a year where you had high income and match it to a year where you had high expense and get that reassessed to get a refund. Or people that have a bunch of technology that they've developed, they can get R&D credits that they had missed 3 years previous. And it didn't matter what they paid, it's the time that was spent, and they get credits for the time spent for them and their team. So those are things you might be able to go back and get back. Most of the time you can't go back and get things that you missed. If it was like, oh, I could have paid my kids. Well, you didn't.
Right.
Or, but I've also seen people make mistakes and they're paying, on 1099 income, the 3.8%, that's kind of the minimum tax you pay on W-2, even when you've maxed out FICA FUTA. It's like, oh, guess what? We get to go back and get that money back. And it's not a red flag. It's not an issue. It's just your accountant messed up. One of our friends here in Austin overpaid that by $300,000. And we found it. And he's like, am I going to get in trouble here? I'm like, why? You overpaid your tax because your accountant screwed up. Like your accountant should get in trouble, but the IRS doesn't care.
Right.
Because this is rightfully your money that wasn't reported properly.